Welcome everyone to Best in Interest. This is Shane back for a stock pick of the day video. It is Monday, April 28th. Quickly wrapping up another month here. Crazy to think we are already over a quarter of the way through the year. Here we are going to take a look at Schneider Electric. This is out of the industrial sector. It is also a foreign company out of France. Before we get too far into the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Click that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Hit the notification bell down below so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday. We take a look at a company's stock, run it through my screener, see if it makes it on my watch list. So if you like that kind of content, make sure you click that subscribe button. There is also watch time as one of the metrics that the YouTube algorithm looks at. So if you could watch the videos to the end, share with anyone you think that might find value in the content, any dividend growth investors or investors in general out there that you know that might enjoy the content. And there is the thanks button down below for anyone who might want to help the channel out monetarily. Buy me a cup of tea. And a special thank you to all the viewers and subscribers of the channel. The channel continues to grow because of people like you. You guys and gals are awesome, and I really, really do appreciate it. This is the vested interest stock screener. This is the criteria we will be running through in the video. It must meet 5 of 8 to make it onto my watch list. Now, if it was a financial company like a bank or an insurance company, we add in price to book whenever it's a company out of the financial sector. Don't blindly use one for other companies outside the financial sector, specifically for banks, really, because one is not really a good metric. You should be comparing price to book for other companies like in the information technology sector or like this one in the industrial sector or any other sector outside the financials to their historic price to book, as well as comparing their price to book to other companies in the same sector doing the same type of business. All right, back to Schneider Electric, and I am familiar with this company. It is actually a company that my business uses some of their equipment and software as well. So and you can check them out at their homepage, www.se.com. That's www.se.com. That is their homepage where I pull this information from. The global industrial technology leader. We, along with our team and partners, provide world-leading expertise in electrification, automation, and digitization to enhance smart industries, resilient infrastructure, future-ready data centers, intelligent buildings, and intuitive homes. I know that we have their EcoStruxure software as part of our building management system. They also provide electrical equipment, circuit breakers, load centers, panel boards and switchboards, contactors. These are just a few, so there's a lot more out there. Push button switches, pilot lights, control stations, UPS uninterrupted power supplies, variable speed drives. Over here is more on the software side, EcoStruxure, like I mentioned, building operation software, building automation software, power logic, power quality meters, power logic, Ionos series. So that would be like outside of your house, right? Showing you how much energy that you are using, right? Your provider might come out once a month or whatever and check that to see how much they're going to charge you. I think it's all digital now. Power logic, power meters. So they offer a lot of equipment, a lot of software applications. Now you can see down here, this is more on the software side, integrated power and energy management software, grid automation and SCADA software, data center software, UPS management software. So any of these they would provide equipment for, as well as software solutions for you, for your business. Like I said, I know we use their EcoStruxure building automation system at my company, so I'm well familiar with the Schneider Electric. We call them quite a bit, as well as the providers of equipment. We use a lot of their equipment as well. Now, the reason why you're taking a look at them, down 6.53% on the day. Big drop on the day. We are talking about Schneider Electric, ticker SBGSY. SBGSY. They are out of the industrial sector. Closed out the day at $46.53. 52-week range as low as $39.77, as high as $56.98. They are not quite within 15% of a 52-week low. They need to drop to $45.73 or lower. Pretty close, but just not quite there yet. That's where I really like to start looking at companies whenever they're 15% of their 52-week low or lower, preferably setting a new 52-week low. But that's where I like to start looking at them anyway. Market cap is at 131.171 billion, a beta of 0.98, so they are just slightly less volatile than the overall market. PE, price earnings ratio, at $26.15 per share. Excuse me. EPS, earnings per share, is sitting at $1.79. Earnings date was today, so I'm assuming something about their earnings was not to the liking of the overall market. You might want to check out that earnings call, see what's going on. Did they miss their top or bottom line numbers, or did their projections, they lower their future outlook, for example? Not sure. I have not looked at their earnings report, so you might want to do that if you are interested in this company or a shareholder of the company. And if you are, let me know in the comment section down below if you are a shareholder of Schneider Electric. Again, this is a company out of France. Forward dividend is at 76 cents. They only pay out one time a year, so keep that in mind, with a 1.52% dividend yield. Pretty low starting dividend yield. Ex-dividend date, May 29th. Looks like they are going to pay out June 20th. So you would be in line for the next dividend if you were to buy them now, but you're going to have to wait a couple months to get it. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $54.69. So they see it going back up from here, but not quite making it back to its 52-week high. Looking over at the right, I like to look at dividend yield theory to see if a company is potentially undervalued. It's a quick check that I like to use. To look at it, you go at their 5-year dividend yield average, 1.94%. We compare it to their current 1.52%. Since this number is lower than their 5-year average, that actually speaks to overvaluation on this one. At least according to dividend yield theory, this one is potentially overvalued. Payout ratio is low. I like under 75%. For companies like this, they're sitting at 44.31%. So plenty of room to continue to pay out that dividend and raise it over time if they wanted to. Now, dropping down, I like to look at free cash flow. I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this company does, and raise that dividend over time, which is what we want as dividend growth investors. They can even put some of that cash off to the side for investments if they wanted to make some investments of their own, buying other companies out or into the market themselves, or just in their bank account, so they can get a little bit of that bank interest rate or interest on their money. Now, December 2021, you can see here $2.7 billion in free cash flow, up in 2022, $3.2 billion. December 2023 up again to $4.5 billion, so nice steady growth so far. But then we get to 2024 and it looks like a bit of a downturn. But I will say their repayment of debt, they are not repurchasing shares. But if you look at their repayment of debt, it does. I'm going to go ahead and give them growing free cash flow, because you can see here. Now, you would want to compare their issuance of debt to the repayment of debt to make sure they are indeed paying more down than they are taking out. Sometimes companies will pay down debt, but if they're taking out more debt at the same time, they might be paying down short-term debt to take on long-term debt later. It may not offset it, but I am going to give them the benefit of the doubt, because if you look at this repayment of debt, $1 billion in 2021, $829 million in 2022, $1.2 billion in 2023, and then they almost tripled that to $2.7 billion in 2024. So it looks like, even though there appears to be a decrease in free cash flow, they took a lot of free cash flow to pay down quite a bit of debt, whether it was coming due or they just wanted to pay it down, whatever the issue is. But that's, if you look at any other year, at least twice, if not close to 3 times any other year here. Now, jumping over to stockanalysis.com, unfortunately, because this is a foreign company, a lot of the numbers I don't get from stockanalysis.com. It's just the way it is. We don't get their projection. We don't get, didn't have anything listed for EPS or revenue, earnings per share, or revenue growth. So all we can look at is return on capital employed. We want 10% or better here. They're sitting at 14.07. And if you recall, we recently changed this. We used to look at return on equity and return on invested capital, both over 10%. So this would be pretty close at 9.07 and 15.19. But we have changed that to just look at return on invested capital. So over 10% does beat that metric with 14.07%. Now, dividend yield, they're saying around 1%. Annual dividend is around 50 cents. Ex-dividend date, again, May 29th. Annual payout ratio 45.98%. So again, I think Yahoo Finance had them at 44%, 45.9. That's pretty close. Dividend growth they're saying negative, but I think that this is actually, because it bounces around here, you can see 49 cents, 47 cents. They've only been paying since 2020, so keep that in mind. So you've only got 1, 2, 3, 4, 5 years, just enough to do dividend yield theory, 5 years of dividend payments to even look at. And it actually looks like they have just maintained a 50% dividend. And this fluctuation here is based on currency exchanges. That's what it looks like to me. All right, with that said, let's look at the screener here, understand the business again. I am familiar with Schneider Electric. They are electrical equipment provider, as well as they offer, like I said, like some eco structures. So they're offering services outside of just equipment, but also software services as well. Around the electrical industry. That's really what their bread and butter is. Growing free cash flow, and that does include, stuff like data centers. Now that we've gone kind of at least part of the EV phase that we're in, data centers, EV, so that would include battery storage, monitoring, and stuff like that. So they are in that vein as well. So anything around electrical is really their bread and butter. Not just buildings, but residential, commercial, like I said, data centers, EV charging stations or charging networks, that sort of thing is what they are in, as the installation, the monitoring, that whole 9 yards. Growing dividend, no, it looks like they've had a 50-cent dividend, annual dividend for 5 years now, and it looks like the fluctuation that you are seeing is actually the fluctuation in the currency exchange rates, not necessarily the fluctuations in the dividend itself. Dividend payout ratio is under 75%, looks like right around 44 or 45%. Dividend yield theory says it's actually potentially overvalued, so no check there. So we've got to check for understand the business, check for growing free cash flow, and check for payout ratio so far. It is not within 15% of a 52-week low, so no check there. Return on capital employed is over 10%. It was at 14%, so it does get a check there. Nothing listed for earnings per share growth, so nothing there. So we only are getting 4. Now, if you were to go in, and I do recommend more than 2 sources, if you had a third source where you could find the earnings per share growth estimates, then maybe you could get another one here, or wait for it to pull back. It's almost $1, within $1 from their 52-week low. So you could get this check maybe if it continues to drop as well, and then you could throw it on your watch list. But right now, it doesn't quite make it there. It does not meet 5 of 8. Let me know what you think of Schneider Electric in the comment section down below. And that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey into financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Schneider Electric you'd like me to cover in the Stock Pick of the Day video series, drop it in the comment section. I'll try to work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those that take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. And hope you have a great weekend. We will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk you can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.